Sharia Business Economics. Case explanation, reverse ratio, money market, and banks bond. Assume that as a policy result of Otoritas Jasa Keuangan (OJK), Indonesia Financial Fees Authority, in year 2012, the required reserve ratio is 10%. Assume that the Central Bank of Indonesia sells $50 million in government securities on the open market. A. Calculate each following: total change in reverse in the banking system and the maximum possible change in the money supply. B. Using a correctly labeled graph of money market, show the impact of the central bank's bond sale on the nominal interest rate. C. What is the impact of central bank's bond sale in the nominal interest rate? D. As a result of the price level change in Part C, are the people with fixed income better off, worse off, or unaffected?
Assalamualaikum audience, Miss Luna, how are you?
Yes, I'm fine, thank you.
Okay, our group talking about Otoritas Jasa Keuangan, Central Bank, and then on the open market especially.
Yes.
So Miss Luna, can you explain to us about the total change in reserve and the money supply in banking system, Miss Luna?
Okay, when we're talking supply money, there is a lot of kind of supply money in the market. Example, transaction money, currency held outside banks, demand deposit, travel checks, and also saving accounts, even money market accounts. Okay. Maybe we can focus to the case that tells Central Bank sells $50 million in government securities on the open market. Didn't it?
Yes.
Yes.
Okay.
Okay. How the Federal Reserve control the money supply? Okay, we can explain the mechanics of open market operations. Example, the securities have an asset $110 million. That's the asset of Federal Reserve, and the liabilities consist of reserve and currency, $90 million and $120. And what about commercial banks? We can say that a lot of commercial banks, and asset and liabilities is equal. That's the point. So what about the money supply? Money supply is currency plus deposits. The currency $120 million and deposit is $900 million. So the sum of this is $1,020 million. So what about if Central Bank sell $50 million in open market? Didn't it?
Yes.
Okay. So the demand deposit will reduce from $900 million to $850 million, because it will be reduced by the customer that buy money market
In government securities.
Yes,
Okay.
of course. So what about the money supply? The money supply will reduce $50 million. So the sum is $970 million. And what happened to the commercial bank? The commercial bank has reserved only $40 million, and the bank should reduce $450 million. So what about the money supply? The money supply is reduced. currency is $120 million in deposit. So the sum is $520 million. That's all, Miss Ella. Did I can explain for the case following 8. Okay, we go to the next point.
Next question, indeed.
Yes.
With use a correctly labeled graph of the money market about the impact of the central bank's bond sale on the nominal interest rate. Can show to us, Ms. Lina.
Okay, I will provide a slide. What's the point? When increase in money supply, you can see the graph. An increased money supply cause interest rate to fall and inflation to rise. So the impact of central bank bond sale on the nominal interest rate is decrease in money supply leads to increase in interest rate because interest rate is the cost of money.
Okay.
The next.
And then how about the impact of the central bank's bond sale on the equilibrium price level in the short run?
Actually, we can see the graph, equivalent interest rate. The point at which the quantity of money demand and flow, the quantity of money supply determine the equilibrium interest rate. So, the decrease in money supply leads to decrease in price level, thus leads to deflation.
Okay. And last question, Ms. Lina. How about people with fixed incomes? It's better off, worse off, or unaffected? Explain about the result of the price level change.
Actually, when we talk about the price level, right? And then we talk about people with fixed income.
Better, worse, or unaffected?
I think that people with fixed income are better off with the deflations because they could consume more and more. Because when the deflation, the value of the money increasing, and we can buy more. So the economics going one way. Okay,
So
maybe
it's better off.
yes, the conclusion is better. Maybe that's all my explanation, please.
Thank you, Ms. Lina, and thank you, audience. That's our case about the C3 cases. Thank you. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.